Mr. Arun Kumar at Strides Pharma is now with us. Mr. Kumar, could you just first start by the US business? If I'm not wrong, the US business is up 30% quarter on quarter. Can you talk about that? And despite that, why was there a margin decline or a margin miss versus the estimates?
Hi, Pankaj. Thanks for having us. Yeah, we've been extremely pleased with our outcomes from the U.S. business. It's delivered a 30% Q on Q. And that's actually what's resulted in an improved margins that we reported today. Our regulated markets business is now trending close to about 19% post R&D, which is a big pullback from where we were when we started this year. So we have added about 400 basis points of margins in our regulated markets. Also, this is the first quarter that the U.S. business has delivered a significant profit after R&D, and that's what has resulted in an improved performance Q on Q.
Talk to us, were there any purchase of any brands in this particular quarter that came in? X that, what happened in the quarter?
No, it was all organic growth. We just had lots of products approved previously that were launched, and we had an increased market share on several products that we currently market in the U.S.
Australia was a flat quarter and you're saying that it was a year-end channel inventory destocking. Can you talk about the Australian business plus the corporate action in Australia?
Right. So Australia, we've been, typically in December quarter, it's always channel destocking that the wholesalers do, being there financially or closing. It's very typical, and it's been always the case for the years we've been operating in that market. So we had a good performance in terms of margins, but on top line it has been more or less flat. Coming to the corporate actions, a couple of months ago, almost 7-8 months ago, we announced an intention to merge with Apotex, which would then make us the largest generic company in Australia. So after we got the Competition Commission approvals, we had access to diligence. Both parties had access to full diligence. And consequently, when we got to the final numbers, the option we had was to acquire the interest of Apotex, and that would have cost us significant amount of new debt and leverage, which we were not comfortable with. Also, we believe that the synergies would play out a little more longer than we had originally anticipated. So as a consequence, we decided to exit the business while retaining a significant supply contract for 10 years as an exclusive and preferred supply agreement, where we would still retain about 50% of the EBITDA that we currently enjoy, and yet we would receive about $390 million from the buyers. And that would go a long way in reducing our debt book. We intend to pay down debt about $160 million, a little over 1,000 crores as a consequence.
Right. So what essentially are you saying is that the Australian business, where you had plans to be number one by merging into Arrow, go on a back burner for now, and it may take some more time after the sell-off of this business?
Yeah, so we moved from a front-end player to a significant supplier to the potentially largest company. Obviously, this transaction is subject to shareholder votes and also the final merger between Arrow and Apotex, because the combined entity is what we will get the supply agreement benefits in terms of contract volumes. And but yes, to answer your point, we have moved from a front-end player, leading front-end player, to a leading supplier in that market.
Right. So what essentially happens to your growth in Australia for the next couple of years? What will be your plans over there?
So we will probably in this transaction we will knock off around $100 million of top line. But as you noticed that we have announced several corporate actions to not only mitigate that, but also we will grow even more aggressively in the U.S. market. We'll continue the momentum of what we have achieved in Q3, and that's going to continue. Our business is tracking quite well there. And we believe that the $100 million odd top line drop in Australia will be more than compensated by the inorganics, the marginal inorganics that we announced today, but also our own organic growth in other regulated markets and in the U.S. So overall, we are very confident of what we have achieved today in terms of a strategic reset, and we are very happy with both the debt book situation, but more importantly on the growth prospects for the company.
So where will the growth come in from? It will be mainly led by the US markets then, where you have already seen a growth. Do you expect similar drugs that you have currently to gain more market traction, or it will be mainly led by launches into the US market?
There'll be a combination of both, Pankaj. We have had improved market share on almost every product that we have introduced in the US market. We don't see any price erosion in the market anymore. We've got 16 odd filings that we've already completed. We've got 11 approvals to date, and we continue to have approval and filing momentum, and we're very confident of building out the US business from here on.
Right. In terms of debt, you were talking about repayment of debt. Can you just tell us about this 400 million close to what you will get? What is the plan over there?
So we plan to, out of our 1,800 odd crores of net debt, we intend to pay down a little over 1,000 crores of long-term debts on conclusion of these transactions, and retain about 500-600 crores for growth capital as we build out the other businesses.
Can you talk to us about the tender business as well? A couple of your peers had seen some competition over there. Can you talk about the tender and the institutional business?
So it's the same for us too. It's a very muted performance. We are having serious issues with increased API prices from China, so that business does not become viable anymore at the current price environment. So we're all working with all the donor agencies to improve the scenario, because at these levels it does not make sense. So we have a very guarded approach to this business, which has resulted in a fairly muted performance last quarter.
Right, Mr. Kumar. Thank you so much for taking out time for us. Always good to get perspective. That was the management at Strides talking about the corporate action. There are a lot of corporate action. The numbers are slightly tricky. One will have to, do some numbers. As of now, the stock